Welcome to the Art of Money podcast with Art McPherson.
Now happy to be joined by McPherson Financial Group in-house CPA tax specialist Mark Bernard. How you doing this weekend, buddy?
I'm doing well. How about yourself?
Man, this is like Super Bowl time for you. I mean, we're right in the middle of tax season. How's your stress level? We were talking financial anxiety earlier, but how are you doing?
I'm doing well. You know, we have about 80 to 100 returns on tap for this tax season, so we're working backwards, figuring out how many I got to do each day.
So what is
so he can get them all done by April 15th.
That's right. No extensions.
Let me take the temperature of the community. What's on people's mind the most? Because I know every year is different. What are you seeing more this year with returns than in years past?
I think people are really concerned with the information coming out about the IRS being understaffed, overwhelmed. People are wanting these returns to get done as fast as possible, especially if they have refunds coming. So people are generally just worried about the whole process of getting it done and accepted and the refunds paid out.
If you want to meet Mark Bernard, set up that consultation, artofmoneyradio.com, or of course, give them a call, 772-281-5223. And I know something y'all do a lot at the McPherson Financial Group. You deal with Roth conversions. Why is it such a big deal to your clients?
Well, we've been preaching this for a while now, but one of the big things is the Trump tax cuts that sunset in 2026. We have essentially been running pro forma returns, which is mocking up returns with the same amount of income earned this year versus the same amount of income earned in 2026 when the sunset occurs. And people are going to be paying 4 or 5% higher in 2026.
So basically one of the things that Mark can do, and one of the things we do for all of our financial planning clients, is he can look at, is it a better time now to do a Roth conversion rather than later? And can you do it where when we convert that money that you're at one of the lowest tax brackets you're ever going to be in during your retirement? And once we do that conversion, all that money, all that growth becomes tax-free for the rest of their retirement, and all those distributions are tax-free. Then when that money has to go to kids or grandkids, it's tax-free again, and the kids and the grandkids get another 10-year extension before they have to spend the money, so it can grow tax-free for another 10 years. So if you're retiring right now and you're 65, you may have 20, 25, possibly 30 years of tax-free income, and then your kids get another 10. It could be 45 years of growth, accumulation, and tax-free income off of that conversion that you paid a very low tax rate on when you converted initially.
772-281-5223. Always online at artofmoneyradio.com. And Mark Bernard, is it something that you see when people get into retirement, they're surprised that they still have to pay so much in taxes?
Yeah, every one of our clients, they look to not pay taxes.
Yeah.
Even they know they have to. They are always looking at ways to be able to reduce the taxes. And some people find it surprising that Social Security, something you've been paying into all your life, can end up being 85% of that income is taxed on the tax return. Others are surprised that they spent all this time saving money and trying to get things into pre-tax buckets like a 401k, and then to see the impact of how much they have to pay in retirement on those distributions in the future.
You know, it's something that you mentioned there. I know you work a lot with tax returns, but there is a big difference between tax returns and tax planning. Educate me on that.
So tax planning, you try to figure out what is the best way to earn their income going forward, and to use models and things to that nature to try to show how we can do tax planning, like Roth conversions as an example, so that your future earnings are taxed at the lower rates. We have a client that they've spent 4 years doing Roth conversions, getting taxed on those Roth conversions. However, they've put themselves in a position when they triggered their Social Security income that they really have very little other taxable income on their return. And what this does for them is that they're able to get their Social Security tax-free without any taxable inclusion.
I mean, would you rather have taxable income at $120,000 a year, Mark, or would you rather have tax-free income at $120,000 a year? And I got two Marks on the show, so I'm speaking to both of you. Yeah. But we basically, one of my examples of when I started working with Mike, and it was because of this client example, he had all of his income was $120,000 a year coming in the door. Last year, when he did his federal tax return, he paid $17 in tax. So it took us 7 years, but we were able to take $120,000 of taxable income and make it where it was almost all tax-free.
772-281-5223. You know, we've been talking about family a lot this weekend. And, you know, when we save for retirement, we assume that the money is for us, and maybe we're going to try to leave some left over for the kids. But, Mark Art, I saw an article in the Wall Street Journal that says nearly 20% of family caregivers are over the age of 65. So basically, here we are in our 60s and 70s, but we're still caring for our parents who are in their 90s. They're reaching 100 years old. So no parent wants to be a burden on their kids, but what kind of planning, what kind of tax planning can we do to help avoid that?
Well, one of the things that we do at McPherson Financial Group is make sure that people have addressed long-term care costs. Long-term care is a big deal. You're going to have in-home care costs. You're going to have, if you have to go to facility, you're going to have facility costs. And you want to make sure you plan for that, because if you have $500,000 in your portfolio right now, you might think, well, you know, that's going to go to my kids and my grandkids. Well, 5 years in a facility at $5,000, $6,000, $7,000, $8,000 a month could eat up all of those assets. So you want to plan for long-term care costs. The likelihood is one of you, if you're married right now, listening to the show, 50% chance one of you is going to need that. So it has become a bigger and bigger problem in our society. So you want to make sure you address that. We have all kinds of creative solves around long-term care.
So when it comes to preparing for a loved one needing elderly care at the end of their life, one thing to think about is if they're going to take advantage of the Medicaid programs in the various states. And you have to look state by state because they all have their own Medicaid rules. But there are look-back rules that they use to make sure that you don't divest your loved one's assets so that the state doesn't get to take it over when they enter the Medicaid program. Here in Florida, it's a 2-year look-back period. So if you think that's something that's going to be occurring in the future, you may want to plan to move the assets so that you clear the 2-year look-back rule.
And that's just one of the great things that they can offer here at the McPherson Financial Group by having an in-house tax specialist to help answer those questions. 772-281-5223. And Mark, all right, let me ask you this. So let's say we're running a little late and getting a little behind on all this with getting our taxes together and getting our returns together.
This is probably a personal example, but he's asking for a friend.
All right, when I ask my friend, I'm going to call him M. Owens, okay? And they're running a little behind. What pieces of advice would you give them right now?
Get it together now. Get your 1099s, your W-2s, all the other tax return information that you get. Put it together and get it over to your CPA, as well as anything that you're doing from like a business perspective. If you're running your own business as a sole proprietor, make sure your books and records are up to date, that your checking account balances, that you have issued all your 1099s to your employees or to your independent contractors so that everything is ready for you to go ahead and fill out the return.
You know, the past couple of years, the IRS has given an extension to get everything filed. Maybe it'll happen again this year, maybe not, but it's not something we should bank on, correct?
Correct. I really highly doubt that we'll get an extension from the April 18th this year. By the way, it's not April 15th. It's not April 18th.
Okay.
Because it falls on the weekend, so you get that extra weekend plus.
Yes.
But don't start on the 16th.
That is not advisable. No.
I mean, people will, but, you know, don't try it right then. Well, Mark Bernard, buddy, thank you so much for hanging out with us this weekend here on The Art of Money. And we can meet you. We can have that conversation with you and give the team a call. 772-281-5223. Always online at artofmoneyradio.com. And Art was saying this earlier in the show that one great thing that the McPherson Financial Group, they can offer to the community is that they're always available. And Mark, and I don't want to put words in your mouth, but you're always available for that phone call.
Always available.
Great. Yeah, that's one reason Mark is here. We wanted somebody here. As long as our door is open, he's here. He's available, be able to meet with clients, be able to talk about taxes, be able to really position their income as the most tax efficient way we can do it. He is here all the time.
Thanks for listening. Want more from Art McPherson of McPherson Financial Group? Find us online at artofmoneyradio.com. We are an independent financial services firm helping individuals create retirement strategies using a variety of financial and insurance products to custom suit their needs and objectives. Securities offered through World Equity Group, Inc., member FINRA and SIPC, a registered investment advisor. Investment advisory services offered through ProStatus Group, LLC. McPherson Financial Group and ProStatus Group, LLC are separate entities and are not owned or controlled by World Equity Group, Inc. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Past performance is not not a guarantee of future results. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. Investment financial professionals are not licensed in all 50 states. Art McPherson is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Please consult with your attorney, accountant, and or tax advisor for advice concerning your particular circumstances. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Arthur McPherson, Florida Insurance License number A1774725.
Today's show has been a work of art.